Vijayamana.
And I'm Tharandu Amarasekara. Welcome to the LOLC Securities Weekly Market Roundup. The IMF has revised down Sri Lanka's economic progress and the outlook, and also have allowed certain adjustments for the reform program in response to the economic fallout of the Middle Eastern conflict and the impact of Cyclone Ditwa.
The IMF Executive Board last week completed the combined 5th and 6th reviews under Sri Lanka's Extended Fund Facility (EFF), enabling an immediate disbursement of SDR 508 million, equivalent to approximately $695 million USD, and bringing total IMF financing under the program to about $2.5 billion. The fund said gains achieved under Sri Lanka's reform program had enabled the authorities to respond to successive shocks while preserving economic resilience. However, it noted that the Middle East conflict has significantly worsened the country's external outlook through higher fuel import costs, weaker tourism receipts, pressure on the balance of payments, and softer external demand. According to the IMF's revised baseline projections, Sri Lanka's economic growth is now expected to slow to 3% in 2026 from the 4% forecast prior to the conflict. NDA inflation has been revised up to 6.1% from 5%, while projected gross official reserves at end of 2026 have been reduced to $8.645 billion USD from the $9.506 billion anticipated before the conflict. Tourism earnings are now projected at $2.5 billion USD compared with the previous estimate of $3.1 billion, while the current account excluding primary income is forecast at 1.8% of GDP, down from 2.8% previously.
The government's fiscal position strengthened significantly in the first quarter of 2026, with the government recording a sharp increase in revenue and maintaining its budget surplus. This is according to data released by the Central Bank of Sri Lanka.
The government recorded a primary surplus of 709.6 billion rupees during January-March 2026, which was up by 78.5% from 397.47 billion rupees in the corresponding period of 2025, reflecting continued improvement in revenue collection and fiscal consolidation efforts. At the same time, the overall budget balance recorded a surplus of 116.35 billion rupees compared to a deficit of 234.46 billion rupees a year earlier. This marks a turnaround of 350.81 billion rupees year-on-year. Total revenue and grants increased by 40.5% year-on-year to 1.5 trillion rupees during the first 3 months of the year from 1.07 trillion rupees in the corresponding period of 2025. Revenue increased to 1.5 trillion rupees from 1.07 trillion rupees a year earlier, supported by strong growth in both tax and non-tax revenue. Tax revenue rose by 36.4% year-on-year to 1.34 trillion rupees from 985.88 billion rupees, while non-tax revenue increased by 91.2% to 153.88 billion rupees from 80.46 billion rupees. Grants remained marginal at 0.47 billion rupees.
The expansion in new active credit cards slowed down in April compared to a month earlier, according to official data, mainly in response to the worsening crisis in the Middle East and also the fuel rationing.
New active credit cards in April recorded an increase of 12,999, but this slowed from 22,473 in March this year, central bank data showed. The total number of active credit cards reached 2,228,852 by the end of April, compared to 2,215,853 by the end of March, showing a 0.6% increase for the month. The number expanded by 2.9% in the first 4 months of this year. Active credit cards rose 7.8% to 157,730 in 2025, following a 4.8% rise in 2024. This growth was driven by the island nation's economic recovery and strong credit card promotions amid falling interest rates.
Time for the updates from the corporate world. Here's Megara with the corporate highlight of the week.
Sri Lanka's worker remittances recorded to an all-time high in May, whilst the cumulative earnings in the first 5 months of 2026 also recorded an all-time high.
Latest data from the Central Bank of Sri Lanka shows that inflows rose by 36.2% year-on-year to $847 million in May, marking the 5th consecutive month of robust growth and one of the strongest monthly performances on record. The latest inflow was second only to the historic $879 million recorded in December 2025. The performance also surpassed the previous May high of $641.7 million, which was recorded in 2025, making it one of the strongest monthly inflows on record. The remittances in May also increased by 10.3% from April's $767.9 million. The remittances during January to May helped push the cumulative figure to above 3.9 billion rupees, which was up by 26% from a year earlier, recording the strongest first 5-month performance in history.
JAT Holdings has posted its highest ever annual revenue for the financial year 2025-2026, with performance reflecting its continued strength in its core coating business, disciplined manufacturing strategy, and investments in growth platforms despite external environment pressure.
For the year ended 31st March 2026, group revenue increased by 9% year-on-year to 12.6 billion rupees compared to 11.6 billion rupees in the previous year. Local revenue grew by 12% to 9.7 billion rupees, additionally supported by the EV charger business and the decorative paint segment, while foreign operations recorded 2.9 billion rupees. Gross profit rose by 21% to 4.8 billion rupees, with gross profit margin improving from 34% to 38%. This improvement was a key indicator of the quality of the group's growth during the year, supported by a stronger product mix, improved manufacturing control, backward vertical integration, and operational efficiencies across JAT's facilities in Sri Lanka and Bangladesh. Profit before tax increased by 5% to 1.68 billion rupees, while finance costs reduced by 17% to 292 million rupees due to effective debt management and lower interest rates. Profit after tax stood at 1.52 billion rupees.
And now it's time for a quick look at the green economy. Here is the ESG update by Tharidu.
Sri Lanka is set to commission a battery energy storage project across 16 substations nationwide, marking the largest ever energy storage project to date of the island.
Each battery energy storage system, known as BESS, is designed to store 40 megawatts of energy during daytime hours and discharge up to 10 megawatts to the national grid during evening peak demand periods. By shifting energy from periods of high renewable generation to periods of peak consumption, the systems will help to optimize the use of solar and wind resources while reducing reliance on conventional fossil fuel-based generation during peak demand. As Sri Lanka continues to expand its renewable energy capacity, energy storage is becoming an increasingly important component of the power system. The deployment will introduce grid-forming battery storage technology across 13 substation sites, enabling active support for grid frequency and voltage regulation. These capabilities are essential for maintaining system stability as higher levels of solar and wind power are integrated into the national electricity network. The program directly supports Sri Lanka's target of achieving 7% renewable energy generation by 2030.
Time for news from around the world. Here's Megara with the international business update of the week.
capital that will bring vehicles powered by artificial intelligence to one of the world's most congested cities.
The launch marks the beginning of a British-born Wave's global rollout of robotaxis, which will extend to more than 10 cities, including Tokyo, later this year. The launch in London comes as self-driving vehicles are being increasingly rolled out in major cities across the United States and elsewhere. The sudden proliferation has heightened scrutiny of what once seemed a highly futuristic technology but is now a present-day reality. A recent CNN investigation into Alphabet's Waymo robotaxis in the United States uncovered serious safety-related incidents, including cars running red lights and driving into oncoming traffic.
Turning turmoil into terrific profitability. We will see you with yet another episode of the LOLC Securities Weekly Market Roundup very soon. Stay profitable.